Harvard may not really have $53 billion in their endowment fund. Well, thanks to private equity, the $53 billion endowment fund for Harvard University may not really be worth $53 billion. It is estimated that nearly half, or approximately $23 billion, is in private equity funds. The problem for Harvard, which is the same for all investors of private equity, is the valuations that are placed on private equity investments. Well, they could be far off from the true value. Harvard said it uses the net asset value, which is also known as NAV. And this is reported by the outside managers that manage their private equity. Now, to me, that sounds like the fox guarding the henhouse. I may always be a little bit skeptical of the greed on Wall Street, but there's such a huge, a really huge, a large incentive for these managers to mark up the value of the private investments, well, because their fees are based off of that investment value. This is a problem for the entire private investment sector, because if the SEC could command and enforce proper valuations of the stated net asset values, again also known as NAVs, they'd probably find so many that were overvalued, and it would likely hurt the entire industry. I still would love to see the SEC, the Securities Exchange Commission, step in and enforce private investment firms to show real market values, not their opinion. Would investors want to own private investments if they realize they couldn't legally depend on the numbers that they are now being shown? Well, I personally was glad to see that some universities are starting to reduce their exposure to private investments. I'm Brett Wilsey with Wilsey Asset Management. If you like these videos, well, be sure to give it a like or comment. And as always, feel free to check out our other YouTube videos and our weekly newsletter for the latest economic news, expert analysis, and market insights.